Hello traders and welcome to another video review. Today is Tuesday, December 6, 2022. Let's find out what is going on the Forex calendar. As you can see, overnight we got the RBA interest rate decision that went exactly as expected. The actual reading was 3.10% and this was forecasted before, so we got a hike from 2.85 to 3.10. Of course, the Reserve Bank of Australia rate statement had been issued as well during the rate decision. During the London session, we got the very important event in form of the construction PMI data release from the UK, scheduled for release at 10:30. Then, during the New York session, we got Ivey PMI released at 4 p.m. And at the end of the day, at 6 p.m., we got EIA Sjrt-Term Energy Outlook from the US. So, for today, there is a few apparently events that might be very interesting to trade. Nevertheless, what we should do is to focus on the charts, and because of the interest rate decision, let's start with the Australian dollar. This is a 4-hour chart of the Australian dollar. As you can see, we have a very nice pattern here on the 4-hour chart. We got the pin bar on the top of the rally, so we got this doji here located at high of 6,853, and then you got the confirmation and extension to the downside. The local high was made at 6,853. So let's find out where is the next technical support. I think that the level of 6,643 might be the technical support for this movement to the downside. The other technical support is located around 6,588. The momentum is coming off the positive territory right now. There is a 43.4 point of the RSI. It jumped slightly from the level of 38. So definitely the RSI is under the bearish, let's say, influence. The bears are pushing strongly on the RSI. It's already on the negative side of the sentiment. So right now we are waiting for the drop to extend towards the level of 30. So that means that 6,644 and 6,588 might be hit very soon. Nevertheless, it looks like the general trend is very strong to the upside. The market retraced plenty of the recent move to the downside, and this kind of a movement here is not anything special yet. If we place the trend line from the lows towards the recent levels, so you can easily see that this line is of course being respected here by the market participants. So wait for the line breakout, wait for the breakout basically below 6,697 in order to see any more extension to the downside on the Australian dollar market. Technical support is on chart, so this technical support might be tested when the momentum will hit 30 or lower, the levels of 30 or lower. So that's the Australian dollar. Let's find out what's going on the US dollar to the Canadian dollar pair. The data scheduled for release are a little bit later today. Nevertheless, we can still take a look what is going on here. So first off, there is of course the line that we need to place on the chart, and this is something like that. So that's the line. Let me just change the color. There you go. This is the local support line. So if we copy it, and we can have a channel. Nevertheless, as you can see, very often this channel is being violated. So the breakout to the upside is still possible. The recent highs on the 4-hour chart are located around 1.85 1.3855 and 1.3811. Those are the next levels of interest for the bulls. The nearest technical support might be located around the level of 1.3570. That's the local technical support. We are just trading around the just trading below basically the lower channel line. So when we break above this local swing high, which is at 1.3644, the extension to the upside is possible. However, let's check if there is some sort of the Fibonacci retracement level there, because it looks like the retracement level might be very close to this recent price action. As you can see here, the retracement level was 61%, here around 1.3585. It's been violated already, so we will not apply it to our chart. We don't need it anymore. Momentum is strong, momentum is positive. We are approaching the level of 70, so this momentum might soon hit the extremely overbought conditions. But as long as the market trades inside of the channel or close to the upper channel line, the outlook remains bullish on the US dollar to the Canadian dollar. Targets are on the screen. The other market we would like to take a look at is the British pound to American dollar. And what do we have here is interesting as well. For our chart, it's showing us very nice up movement with the higher highs and the higher lows. So the recent high was made at the level of 1.2343. so if we place the line here, we can easily see the swing high. So that's the swing high. The local technical support, as you can see, is being tested, is located at 1.2154. tested once, tested for the second time, for the third time. So we should definitely keep an eye on this kind of the technical support here. The other technical support might be seen around the level of 1.1931 or 1.1925. This is the target in case of the extension to the downside, and it looks like the market wants to go lower because we have a bearish divergence between this high and this high, and the highs on the momentum. As you can see, the momentum is making lower highs. So right now it looks like the market wants to come off this higher levels and test the technical support. We can even place one more horizontal line around here to generate some sort of the support zone. Right now the RSI is 52 points, so it's not that strong. It's still positive, but it's barely positive. So when we break below the level of 50 and the momentum will start to drop, the extension towards 1.1909, 1.1918 is really possible. Nevertheless, if we zoom out, we can clearly see, excuse me, the other point, there you go, we can clearly see that we retrace plenty of this recent wave down. The amount of the lines here, as you can see, is really big, and the highs from the middle of the August and the beginning and the middle of the August are already violated. So we need another swing to the upside to be created. So this movement here looks like a very nice rebound, very nice uptrending market. So the outlook remains of course bullish. And last but not least, let's take a look at the oil market, because we will have the AEI data scheduled for release later on. So what do we have here is a nice movement to the downside from this highs around the 93.80. So we got this very nice trend line. It's been hit many times, and I think it will make a difference when it will be violated from the downside, because it looks like the market is going down. The local support is 73.54. This is the support from where the upward movement was done, and if we zoom in, we can clearly see that the market recently made a pin bar here around the level of 83.33. Then you have the period of the down movement, ABC to the upside, three wave bounce to the upside, of course, and then big bearish engulfing pattern on the 4-hour chart, resulting in a slide towards the lows of 77.96, and right now we barely hold around the old technical support at 76.88, 76.85. So we are approaching the trend line again after it was violated. We are approaching the swing low at 73.60, and the momentum is negative, so the outlook remains bearish unless the pin bar high, the doji high located at 83.33, is violated. So please notice the fact that the market of the crude oil is still under the bear's control, and is coming off the levels over $83 per barrel. So the outlook, short-term outlook, remains bearish. Please watch the market reaction when the market will eventually test this trend line from the above. So this level around, let's say 75, 74 is the key level right now to watch, except of course the swing low at 73.54. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.